Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to talk about all this lovely green on the charts and, not only in crypto, but also in stocks this time, where we do see just this sea of green and everyone seeming to take a little bit joy in the bounce that we're finally having on the stock market, which is actually delayed compared to crypto, which had that massive classic Bitcoin fake out, towards these macro downtrends that it always seems to have, and now the stock market is trying to put in a real foothold. We do see something very unusual for the stock market, which is, a sea of green, but Apple in the red. And so, if you were just to imagine a lovely red apple sitting on a green table, I mean, this would be abstract art right here because that's what we've got. And this is actually a fairly big danger for the market because these high caps do tend to go last. And if Apple does tip over, that could tip the tech sector into a final capitulation, and the rest of the market could come tumbling with it. These big names just do have that kind of authority in the market. I mean, these guys are like the size of countries. They're not just companies. They have, they have revenues and things like that the size of countries, and so this isn't a small deal. Let's go ahead and look at the global stock exchanges. You can see, of course, that green that was on China has now spread to the rest of the world. Of course, this is due to the dollar having a pullback. We still can't count the dollar out, but it is nice to have that relief so that markets can just kind of breathe, can kind of find their footing, and just it just feels better when you see green on the board as opposed to continuous red. And so business decisions are also easier when you have managers across the world not seeing like red just blinding them and their vision for what they want to do with their companies. You need to have this regular green. Guys, let's go ahead and look at the market of watch. Of course, we did have just a bunch of speakers over the last couple days, rather this morning and yesterday, including Powell and Evans. The Powell, a digital finance thing, I heard it was pretty interesting. I saw part of it. It is kind of interesting. You may want to check it out. The one that was given yesterday on a digital finance. It was mostly about digital national currencies, that sort of thing. And then there was a lot of commentary. But, we also heard from Evans today, and Evans actually suggested or kind of hinted at that the Fed may end up pivoting around March 2023, which is something that I've been saying for about 6 months now. So, guys, like if that ends up being true, then another one for another win in the camp of Alpha Commission over here. Boom, like we're killing it, guys. Evans is just one board member, and so just a one Fed president, and so he doesn't really control all of this that's going on. He's just a Chicago there. There certainly are a lot more voices than his, but I think that sometimes, out of all of these people, once in a while, one of them lets the cat out of the bag. And I think Evans may be just hinting at what's to come, right? And so those are good things. Like we want that pivot to come in March and not too much later than that. We don't want to go through the end of 2023 with just heavy increases. We'd like to see that taper off by spring and confirm a bottom to the market, hopefully by then. We also saw that new home sales were pretty robust, guys. So the economy hasn't really slowed down. Consumer confidence way up there, 108, with an expectation of 104 and previously 103. So not sure what's going on, but people are just feeling a little bit better this month, and so we're seeing that reflected in consumer confidence. One thing that we hope is not happening is that people are just getting used to inflation, because if the different middle managers and billing departments and all of these people like just start getting used to increasing prices, just a little bit every single month, then that tends to be the pattern that gets stuck into society, right? So you have all these systems, all these basically bureaucratic systems, right? Because every company needs to operate with procedures, and they just go through a regular process of increasing prices. And if the staff that does that just thinks that's their job, you hire new people and that's what they're doing from the beginning, just increasing prices all of the time, it becomes a self-fulfilling prophecy. Landlords just keep increasing prices, just everyone keeps asking for raises, and you just end up with just running in circles, chasing inflation. And so the Fed really does need to kill inflation before the market becomes very confident, because that means that they're getting used to inflation pretty much. Guys, we're not there yet on fighting inflation, so this could still be a battle. Evans kind of hints that maybe it's going to be a 50 basis point increase next, not a 75 basis points one. He said we front loaded as opposed to we're front loading these higher rates, and so maybe the biggest rates are behind us. And of course, the Fed did do two historic raises of 75 basis points. Those are considered jumbo rate increases, so it's quite unusual. And the market wouldn't really like it if we did another 75 and then another 75. Really, the market would prefer we do 50 basis points and then perhaps 25 basis points after that, and then just as needed an extra 25 here or there. Guys, gonna kind of move on from this. There is just a lot of talk these days, but we'll get into gross domestic product, in a later episode. But of course, this is going to impact how we start to view the coming recession, right? Because 2023 is really about the recession, especially the end of 2023 is going to be that way. We're going to really know how deep that recession is going to go by the middle of 2023 or by the end of it. And 2022 is still kind of about the inflation, and we're kind of moving to that stagflation stage where that's pretty much where we are in my assessment. And then comes the recession. Okay, so moving on to the charts, let's go ahead and see what the big mover and shaker of the day is doing. Of course, that will be the US dollar. Wow, look at that rejection, huge rejection, just smacking down, just tagging all of these EMAs on the 4 hour. Let's look at it on the daily. On the daily, quite a normal pullback. Hit the 4, didn't even get to the 9 yet, so still super bullish from a daily perspective on the part of the dollar. But it is getting kind of that toppy formation where you can't see that once you break the 4 EMA, you tend to get to the 9 EMA and to continue to go from there. So let's hope that this solid break here, right, this kind of toppiness pattern, ends up breaking the 9, and then we can expect a dramatic pullback and maybe just a little bit of a run on the charts to the upside, right, in our favor. Guys, this does come right at that point that I was projecting, and you guys may wonder why I was so mad at TradingView for always messing up my lines, right? It was always like readjusting these lines. I had to just completely delete them and redraw them. For some reason, they were corrupted, like a corrupted file. But the whole point is that I needed to be able to track this spot, because, guys, look at this. Like, we were totally looking for a potential pullback right here at 114, and boom, 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 all four of these resistances that I've been pointing out for the last week finally hit. I was getting a little bit baffled by the fact that we had broken above this once, twice, three times, and I was really getting concerned that we were gonna, get stuck in this area and just chop our way up to 118, 120, which would be a disaster. It would be an absolute disaster for the market if that were to happen. But if we do get this pullback, that does give the market a little bit of time to compensate. And so hopefully, right, hopefully we get something, like this, right, before we continue on our way, if we're going to continue on our way. And of course, respecting this trend line, that might bring us to 120 before ultimately topping out, because I really struggle to see how the market could tolerate, more than 120. It just it boggles my mind. I mean, I would see countries collapsing, okay, like literally collapsing, just failed states, if the dollar keeps pushing up this aggressively versus the currencies of other countries. So those countries really need to get their stuff together, and the Fed really needs to pivot. And if we do a little projection based upon what I was just talking to you about with Evans and interest rates, then we might suggest that the Fed perhaps having a couple more just medium-sized increases until the end of the year, or maybe right into the beginning of the new year. And then what would we see? We would probably see some type of tapering off of the dollar, right? I mean, it could go sideways or something, but probably some tapering off of the dollar, into March, and then that would be maybe just an ultimate topping, moment. And then maybe it goes sideways for, the rest of the year or something like that, right? I mean, it could pull back like this, or it could go sideways for, look, I mean, it can go sideways for like a couple years, guys. So what I would be wanting to see is some type of pattern like this, okay? And that would give the rest of our indications, the rest of the components of the market, a chance to do their thing, as opposed to us just talking about the dollar every day, right? The dollar, the dollar, the dollar. But guys, just wanted to point out that the TA worked, guys, right? The TA worked. I really was trying to. God dang, where? Can I just. There we go. Got it. Okay. I was really trying to just, figure out where the dollar would top out at, and I'm still hoping that this is a local top for us, even if this is going to be our macro top, perhaps. I'm hoping that this is our local top and that we get a pullback and maybe a nice run. So watch this space. Let's see if we can break the 9, maybe by the end of today or by the end of tomorrow. And then that would suggest more chop to the downside, and that would be great for potentially entering into some long positions, right? Guys, let's see the VIX. The VIX also did that sneaky fake out. Guys, I said it was highly likely to be one of these little fake outs up here. And then it just kept pushing, and I was like, okay, well, we're going to hell. But you know what? We had a pullback. We're now back into this wedge, so the market decided not to do the thing. And once again, like this thing could come all the way down, because once we're inside of this wedge, I can't be bullish on this. It's pulling back, right? I mean, this is a healthy pullback, right? Again, this one hasn't broken the 9 either. We're just breaking the 4 EMAs. But if it does break the 9, just like the dollar, then this thing could potentially see the bottom of this wedge, and then we could just continue to chop it out, and maybe we have some nice pumps on the chart as we get closer to this pretty good for trading zone on the VIX, right? Guys, let's go ahead and check out USDT dominance. And you do see that money is just coming back into market. Pretty much what I said, we're going to bounce between these lines. And so here we go, bouncing once again, playing this game of ping pong. And with a nice little double top here, let's see if we don't break down here, which would be good for markets. So we're just going to watch this space, right? Just going to watch this space. This one is getting very close to getting underneath the 9, and that would suggest that the market is feeling rather bullish. Let's go ahead and jump over to Bitcoin to see what our BitBoy over here is doing, right? Come on, BitBoy. Let's see. We've got that massive downturn, right? But we also have this local formation, which looks kind of weird without some type of, you know, without some type of mean reversion. I mean, we got this, but you know, I mean, either we should drop to hell or we should get another bounce. It's like pick your direction, Bitcoin. Like pick your direction. We're right up against our macro resistance, and something needs to give. So we did, try to have that pop up on the 4 hour. And yesterday I mentioned, that the key level that we had to hold was was down here, right? I've actually updated these for today, so that's not exactly the price that it was yesterday, but effectively it's around the same range, because see this up and this down, it was almost the exact same intensity, right? And so we ended up with levels that were pretty much the same as the day before. And so all of this was basically just moot. It was completely negated, and it's almost like you're just continuing and doing the same thing. And so I would expect that, yeah, I mean, we could get back up into that area. But look at what I said for the 2 day, and this one I didn't change. The white one and the red one I didn't change. The blue one is updated. Uh, this one here I said in order to capture the 2 day and the 5 day momentum, right, which were closing yesterday, that we did have to close above this white level of 19,700, and we just weren't able to do it. And so then we would expect to come back down to support or our other momentum zone that we had yesterday, and we did that. We precisely did that, and we closed above that area at the end of the day. And I suggested, well, we're going to live on to try for one more day. And what I meant by that is that we're likely to see sideways or a little bit of a bounce. We got a little bit of a dip, a little bit of a bounce, basically just chopping it out, right, for one more day, right? Nothing goes in a straight line. It has to kind of have a little waviness to it. And so, we are just kind of hanging out around that level. But guys, overall on the 24/7 exchange for Bitcoin, we didn't secure that level for the 2 day and the 5 day. Now, the interesting thing is, and this is the updated level for that one, I just wanted to point out that we pumped and then we hit our rejection right at that spot that I put the red box. Like we're literally got rejected right there, and we're struggling to break through it. But the thing that I want to point out is that the new 2 day and the new 5 day target is actually the same as our new daily. And so as long as we can hold above 19,000, essentially 19,050, this is going to retain a bullish posture. Now, of course, we have like a week to go until, almost a week to go until the end of the next 5 day. We have a couple days, a day and a half to go until the next 2 day. So, first of all, I can delete this one. This one now replaces it as our new 2 day and a 5 day. And this one right here is we're just gonna watch to see if we can actually break over that, because if we do, it's interesting. It's almost like this was just an entire fake out, and that this was the real move off of this structure. So I just want to see, do you get rejected from this area, because that would suggest some type of a slowdown in the bullishness, and do we just hold at these basic momentum levels, or are we going to retain this kind of super bullishness from the 2 day and the 5 day that we missed yesterday, but somehow the market decided to reach back up for? So it's quite exciting, guys. It's quite interesting. This also happens to be our new 2 day Stoke level, right? And so, guys, like if we get above this Stokes, it's just going to imply some pretty big moves over the next couple days. But for the time being, we're just holding on in our daily zone. So on a daily basis, we are bullish, and there's no way around that. You can see that we are rejecting right off of that 2-day Stokes, though. So on the 2-day, we're still not where we need to really be, but we will have continued pressure to the upside as long as we hold over 19,000. I know this stuff can be a little bit confusing, but what I'm trying to say, okay, guys, is that we have just the most basic minimum threshold at around 18,700. Where we'd like to sit, just to be sitting securely on the daily and also the 2-day, is at 19,000. Okay, but if you want to see some bullish action, then you really want to get over that 19,600, and that's basically what I have to tell for you. And on the weekly, we have the 4 EMA up here at 19,700, and so if you want to see some macro stuff, then we really have to get over that area. Now, this line, this standard over here can actually be coming down quite significantly. So, I'm still going to keep this green box in this area, because if we do get over the 9 on the weekly, that's going to be just incredibly bullish, guys. It's just going to be incredibly bullish. But and so if you guys are just waiting for a macro play, you want like the whole chart to turn around, you want to get out of this macro downtrend, then just wait to see if we break into this and hold this green box, okay? Now, if you're just playing dailies, like little daily trades, then you probably want to see if we can hold 19,600. It's just going to give you your best shot. 19,700. It's going to give you your best shot, right? If you're playing like the 4 hours and all of that, then you really want to see us holding that 19,000, and definitely, no lower than 18,700 for any of this stuff, okay? Because that's our minimum threshold to hold on to here. And if we do just look at our volatility on the daily, you can see that we're still contracting to the downside. We haven't flipped into a new momentum move on the daily. The 4 hour did end up flipping to a new momentum, and it actually ended up, it is contracting, but this looks like a very odd move, so we're going to have to be updated on what's going on exactly. We're going to see exactly what this thing does. And let's just see if just a lot of these moves seem like they're just having kind of continuation in what they're doing. And but really, if I just look at the daily, we can see this contraction. So we're just consolidating here on the daily, okay? And probably when that momentum pinches off, then the daily will be ready to go in its direction. So let's just wait for that. Let's go ahead and look at. Well, let's double check to see if we have any drives of divergence here. You can see that we do have. This basically longer term bullish drive on the MACD is actually still in play. So we can't dismiss this. We got a nice run out of this drive right here, and this one still seems to want to pop, so we can't dismiss it yet. And I believe I was looking at something on the 16-hour. Yep. Look at this couple of drive. Look at this. Look at these multiple, drives of bullish divergence on the 16-hour, and then on the 12-hour, look, just multiple drives of bullish divergence, just coming out of this. Bearish control zone, which does carry extra weight. Like if you have all of these drives of bullish divergence in the bearish control zone and you're starting to pop out of it, it does carry extra weight, okay? So the momentum, the divergence, all of this stuff is in favor of us, And it's really the dollar that's going to allow that. It's really the stock market that's going to allow crypto to go and to make some type of a run. On the daily, we can look at our EMAs. They are starting to flatten out, and so we could be seeing a squeeze play in formation here on the daily for Bitcoin. So that is something that you want to watch out for. This cannot be too easily dismissed. And if I go to the 2 day, you can see that it's starting to form, right? On the 2 day as well, you do see that our candle is in between the 9 and the 21. But more importantly, my trademark EMA, right, the one that I use for our alpha commission that I've added to our arsenal here is the 4 EMA. And in conjunction with that 9 EMA, we were able to front run that squeeze to the upside on the 2 day, right? As well as on the daily when we got that nice pump up here. So we've been positioned fairly nicely to capture that move. I definitely didn't want to call this one while the dollar was pushing over 14, 114.50. But now that the dollar has come down to 112.60, a significant drop on the U.S. dollar, allowing assets to pump, then I am a little bit confused, guys, because just truth in advertising. It's not like I'm a fortune teller or anything like that, right? I can't know the future, but everything is telling me there's the possibility for a bounce. And at the same time, if the dollar just drives back up to, if this just flips around and drives back up to 114, then we're all going to be screwed, right? And I'll show you right here exactly how it did something extremely similar. Where if we just take a little bit of a fractal off of this one, right? Let's take a little fractal off of this. And let's delete this line just so it's more clear. Let's get rid of this. Get rid of that. Get rid of this. And then just put our fractal right up here. You could see that we could have a pullback, right? We could have a pullback that then suddenly springs back up, right? And so the dollar does this. The dollar does this. And look, I mean, guys, like it looks very similar, right? Like this is what the dollar does. It did it right here. It could do it again. And so some people could be getting trapped right now into bullishness, right? I mean, you guys see this, right? You guys see what the dollar does and how it fakes people out. And this could be a pretty gnarly one, okay? So just be really careful. I'm personally not going to risk too much at this point on the chart. Okay, like we got that excellent play, right? The Alpha Fam got this play, and we called that we would have continuation for one more day, but the 2 day and the 5 day failed to meet the conditions that it needed, and I'm still on high alert that we could be rejecting and that this could be just a consolidation before the next big move on the daily, which could be to the downside if the dollar just suddenly recovers. And since we know the dollar has a pattern of suddenly recovering, I don't want to press my luck right at resistance. If we talk about diagonal resistance, right, which is something that's important to me, diagonal resistance, I believe in it quite strongly, right? These kind of supply and demand trend lines, right? They're really trends, but we're far away from it back here, right? Far away from it back here. But right here, we're like right, our nose is shoved right up into it. So why don't we just wait for this green box, right? If we're just a couple $1,000 away, if we're just $2,000 away, something like that, well, we're really just $1,000 away, right? If we're $1,000 away, why don't we just wait for the green box and get outside of this downtrend rather than trying to front run the breakout? It's too late to front run the breakout, right? Our positions to enter in, right? This is where the Alpha Fam was trading. This is where the Alpha Fam got into our positions. We even got into a position back here, right? And then we took our profits here. 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 We said get out no later than here, right? And then we called this stuff, right? We played some of this action, started to get a little bit uneasy, followed the heads and shoulders, played this one right here, and now it's like you're really pushing your luck. Guys, we got the double tap, okay? We got the double tap off of the downtrend, and usually you have one, two, of these type of rejections before you end up falling down. I'm not going to repeat that stuff. I went over it in previous episodes. Okay, so usually that double tap precedes a dramatic fall. So I'm not going to press my luck on this one. I'm not going to take this trade unless we get to the green box. Then I'll be bullish because we'll have broken our year-long downtrend. And I could end up, just be making the wrong decision. Maybe I should be getting into a position right now. But we got into a position, right? We got into a position down here. This is where the Alpha Fam got in, okay? And then we took our profit up here, right? That's documented, guys. So, do we need to be taking every trade, right? And press our luck when we don't really have any type of pattern to go by? What is this? Uh, just some type of up and down, right? That's not a pattern. There's no pattern to play here. The measured move of this pattern already got played out. There were two patterns. The measured move got played out for both of them. And this is just garbage. I don't want to play that. It's not the obvious setup for me, right? And we're right at resistance. All of this stuff had space to play. This had space to play. This pattern had space to play, and we were just waiting for the breakout, right? This is nothing. There's nothing reset. So I'm not going to play this, guys. But that said, if we hold 19,000, we'll probably survive another day and chop around in this mess. And again, if we hold this level of 19,600, right, it's going to be super bullish. And by the way, we're not doing that right now. We're not doing it. So this isn't like super bullish or anything. It's just kind of a reaction. It's just kind of retracing those candles. So I'd be very wary about this move, and just let that daily volatility, to continue to play out. Let it pinch shut, right? Let this formation, let the EMA cross the volatility, and then let us turn around and then understand which direction we're going to be expanding our volatility into. Because we're probably going to fly. We're going to either fly up or we're going to fly down as this volatility expands. Right now, we're just contracting, we're just kind of consolidating. And so I'm underscoring this stuff quite a lot. I know I'm talking about it and repeating myself a lot, but there are a lot of you who might just take some risk that are a little bit more than what's warranted at a year-long macro, downtrend resistance line. Okay, so just be careful. This is the tricky Dixie. Okay, it's tricky Dixie, man. It's gonna fake you out. It can easily do one of these things, and you know why I suspect that? Because of these wicks that had been throwing me off for several days. It broke up, it broke up, it broke up. 3 times it punctured this level. Okay? It doesn't have any problem puncturing that level. And if the dollar wants to, it has a very common pattern on it to break up after doing this little bit of a touchdown to the 4 to the 9, and then pow, right back up, right? So just be careful, guys. Just be careful. You know, very close to the level that we need to capture in order to consider to be bullish, to break out and that sort of thing. It's not necessary to play right up against resistance, in my opinion. Not financial advice. Do whatever you want. Go ahead and look at the Bitcoin CME chart on the professional exchanges. We do see the difference right away, but overall, getting similar vibes. Let's go to the 4 hour. You can see we had a similar setup, and we are actually on top of the zone that we need to capture for the 2 day and the 5 day on the professional exchange. So the professional exchange is actually looking a little bit more bullish, but we still are rejecting off of that 2 day Stokes. And so similar to the 24/7 exchanges on the CME, I'd actually need to see us get above 19,800 and close above 19,800 before I'd have some high confidence in the bullishness of this chart. Otherwise, we're just kind of swimming around, playing, kind of flirting with those 2 day and 5 day levels. And, most likely we're going to have secured our daily, which is here somewhere around 18,950 ish. And then the bottom line is this 18,800-ish. Of course, we keep bouncing off of this white line down here. It just continues to hold. And so showing quite a bit of strength as we're starting to kind of round out. And it does suggest that we do have a good chance to break out. But again, it all depends on the dollar. So CME looking a little bit more bullish, but having a little bit more to prove on the 2 day Stokes. That's all. Guys, Ethereum, very similar to Bitcoin. We're capturing the daily. Let's see, when does the daily close? In 3 hours. So if we close here, if we close above 1330-ish on the daily, we're going to have captured our daily momentum zone, okay? Like not just our momentum, but like all of the momentum indicators. We're going to have captured all of them, right? If we go above 1330. Our bottom line is 1270, but above 1330, we've captured all of them. So on the daily, no one can say we're not bullish. We're bullish on the daily, guys. Okay, even after that massive fake out, like we're still bullish on the daily, and you can see overall, like our path is pretty nice. And regardless of this fake out to the upside, regardless of this fake out to the downside, which was basically liquidation events, right? And we are getting into that squeeze play on the daily between the 9 and the 4, which could pop us up to even 1400 in order to get on a daily squeeze play with the 9 and the 21, which would take a little bit more time, in my opinion, just because of how downward this EMA is. Let's just go ahead and compare that to Bitcoin. You see, the Bitcoin 21 is a little bit flatter, right? So it has a much higher chance of popping up. I mean, this thing could drop down, and then this is going to be pointed down again. But the EMA that we're looking for, that yellow EMA, has a chance to squeeze this price action between the yellow and the red and pop up to the top side. But on Ethereum, it's just a further away. Ethereum is lagging Bitcoin in terms of this play. And then also Ethereum has more work to do on its 21. So Bitcoin is actually the more obvious play, just if we're going by EMA theory, okay? And then Ethereum, let's just go back and look at our levels. If you want to get super bullish about Ethereum, you're going to want to look around 1400, okay, guys? So 1380 to 1400, if we can capture that area, then it's going to start looking pretty interesting, guys. Like really interesting. Okay, and we're above our 2-day Stokes on Ethereum. So Ethereum is a totally different animal than Bitcoin right now. It's captured its 2-day Stokes. Bitcoin doesn't have its 2-day Stokes, right? It's below its daily 9. Bitcoin's above its daily 9. So they both have strengths and weaknesses. And so we're just looking for the overall health. And that's why I have these different types of zones that I do, and why we also take a look at the EMAs. ETH, the CME contract, that one's not even squeezing as much as the. So this is the professional exchange. It's not squeezing even as much as the 24/7. So the ETH CME chart is looking much weaker than the ETH chart. And in fact, we did have an Alpha 9 knockout right here, which is probably why we got sent down. You can see that this 9 EMA crossing over the 10 EMA bullishly, but it knocks it out to the downside. So that was an Alpha 9 knockout, and we've recovered that because they're always like fake outs. That's why I have a name for it. That's why I call it the Alpha 9 knockout, because it's a fake out. And then you end up popping back up, and you can see this one right here. Bam, to the downside, and then whoop, came right back up, right? It's the Alpha 9 knockout, guys. Like, we know this, right? We gave it a name, you know? And so this is the move that I look out for in order to have a little bit more confidence that when we're dropping, it's not a real drop. It's just kind of like a fake out drop, right? And the rest of the EMAs have to kind of hold their bullishness. They have to hold their nice look to them. But that's how they liquidate people, guys. Let's see here. We do have just levels that we should get above that 1350 on the CME. We've got the general momentum zone, the minimum threshold. But if you want to capture all of our daily momentum, you're going to want to get over 1350 on the professional exchanges, and then 1430 if you just want that kind of longer term potential for a squeeze play, and just bullishness on ETH. Okay, we're not talking about bearishness right now, guys. We're talking about bullishness, so that's interesting. Okay, and we are right up against that macro resistance on Bitcoin, so it's kind of weird. But let's go ahead and go over to stocks to see what stocks are doing and why all of this was possible other than the dollar. Well, we had this bullish engulfing candle on the S&P 500, right? I told you guys last Friday when we had all of that red on the charts, where it was just all red for all weekend, for the entire weekend, that most likely by Monday or the end of Tuesday, we're going to see a turnaround in the market, because we're gonna just be oversold last week, okay? And so we do have candles to reclaim. We do have gaps to fill, right? Let's go ahead and look at SPY, and you can see we have this gap right here. Look at SPY, right? So we have a CME gap right here that we needed to fill. And we filled about half of it, okay? I mean, about 2/3 of it. There's a little bit more to go. And so if we do get another pump and fill this gap, well, good on us. Like, we've filled the gap then, right? This one got filled, so got filled right here. So I can turn this one gray. This one that was over here, this one got filled right here by that blue candle and this red wick. So I can turn that one gray. This one is still open. So we still have our higher gaps that remain unfilled on this chart. But more importantly, just for the current level that we're at, we're working on this one right now. And so this pump on the stock market, there's two ways to look at it. One, we're legitimately finding a floor. The dollar is legitimately maxed out. And, the S&P is going to start flying. Okay? I don't see that as happening. I don't see any amazing squeeze play or anything on the daily. Just see like a very weak, kind of half-assed gap fill. And so the second, possibility is just that we're doing a gap fill before continuation to the downside, and maybe we're going to get some type of pump, and then, we get trashed down again. I'm more inclined to think that, where if we look at this structure, um, yes, we could do something. We could do something like this, maybe, right? And maybe make a head and shoulder right here, and have a measured move that kind of breaks out to here, and then maybe we're just entering a new era, right? Something like this, and this could be a bottom, right? Like, there is the possibility, like, this is our last hope before we have just like this capitulation. But you have to ask yourself, does the world look ready yet? Is the world ready for that? Do we have all the data we need to like suggest that type of play? And it's no, we don't. We're not really 100% sure how deep the recession is going to go. We're not really sure when the Fed is going to pivot. And so why would the bottom of the market be put in before we have any of that data? Right? There should be more uncertainty in the market. And so the market may decide to go sideways, and that's fine. You can go sideways just while you collect data, right? That's fine. That could even get us to March, right? That could get us to March. Like, we could pump in October, get some rate increase in November, right? Kind of just grind it out, decide the Fed pivots, right? Try to break out. Recession data is really bad. Everyone gets freaked out, but ends up being okay. And then we end up going on our way. That could be the bottom of the market, okay? Maybe something like this, just tagging one of these lines down here, so like we did here and here. But then we're basically using this and this as a diagonal of support to basically bounce our way out of this crap, okay? And then we avoid this one. Now that's possible. It's highly possible. So I'm not going to dismiss that concept. This is the last zone that we have to escape, like another 25 to 50% drop in all of these assets, 25 if it's stocks, 50 if it's crypto, right? 25% down. So, we're on the lookout for this, okay? Obviously, I've marked this out, so obviously I'm thinking about it. Let's go ahead and go back to our ES1 S&P 500. This is the worst case for the global financial crisis. This is not what I think is going to happen. This is the worst case that I could imagine, okay? And then here's that green box, that we could bounce off of as kind of a last resort. This would be if we price really badly, okay? If the market has to get readjusted, let's say that this is the bottom of the market, but that we have a recession. Okay, let's say this is the bottom of the market based upon interest rates, but we have a recession. It's a deep recession, but it's not terrible. It's not like a collapse of industries and everything. Then I could see us bouncing off of this level. Okay, I could see us getting to 3,200 on the S&P 500. Okay, and then turning around, going to the upside. If we lose that, then okay, game over. But I think conservatively, I mean, moderately, 3,200 is a reasonable bottom to expect. Reasonable by calculations. All right. Top side of that, maybe 3,500. Right. Just very liberally, 3,500. Just if we have some type of dip. All right. Like, so one or two legs down is possible. And we could be closer to the bottom of the market than people think. But I am going to leave the scary interpretation open because we've also got like all this really scary stuff going on in the world. And that stuff can get out of control very quickly, okay? So, going to keep my model down here open as well. But this is my hopefulness, okay? And we're very close to that. So maybe a little bounce and then a drop and then we put in a bottom. That would be ideal in my estimation. Because we can get it over with. We can get it over with as opposed to going sideways and then just wondering when the next drop is going to come in. We could get it over with. Just reassess the value of the stock market, right? Get those kind of recession level prices, in before the recession, really, or before the recession data comes in. Because the recession data always follows the recession. So it's always late. It's always lagging indicators, right? And so we're probably in a recession already. The market just needs to price that in, and then let's go. And then if we have a collapse later on, well, at least we're on our way up, and then we can collapse later on. And I can reassess all of this later on, okay? So this is my hopium, that this is the max bottom, and that we can bounce out of this, break our macro downtrend, and then if we have a global financial crisis in 2023 or 2024 or whatever, then we can reassess, when we're coming down to these levels. And we're probably coming down to these levels eventually. But what I'd like to see is something like this, right? And then we come down to them. Just give the market time to kind of adjust for this stuff. Alternatively, straight down, V-shaped recovery, up only for as long as you can imagine, the rest of your life, just up only. It'll hurt, but that would be amazing. For the rest of your life, it would be up only, okay? But yeah, I mean, sure, let's bounce here and go sideways and then drop down and then chop around and then try to do it 3 months later and then again and continuously be terrified until we retest these levels, right? I mean, like, we'll never know when the drop is going to come unless we get it out of our system, right? So let's get it over with. That's why the Fed should have just increased rates to the maximum right away when they first found out there was a problem. They should have just done it right away, just crashed the market, let it be a flash crash, have a V-shaped recovery, inflation's taken care of, and then we're all cool, right? But they just let it drag on for too long, and now we have stagflation, and so we're always wondering, are we going to bounce, or is the floor going to get kicked out from under us, right? Are our legs going to get kicked out from under us? And we're just going to fall on our butts. That's the problem with stagflation. We just don't know. We just don't know. So this is my worst case. This is my moderate case. The best case was already lost. We lost the best case, okay? Like, the best case was that June was the bottom. And we've already broken below the June lows, which suggest that we're going to go lower. But nobody knows, right? Nobody knows for sure. And so, again, like, it's just constantly wondering. Like, if we had made a higher low and just kept going, then we could have said, oh, that's the June bottom. But we broke down from that level. And now everyone's wondering, when are we going to hit the bottom of that next level? When are we going to test the bottom of that next level? And the whole market has that on their mind, right? The whole market has that on their mind. We did not bounce where we needed to bounce from. But on the weekly, I did mention in a couple episodes, the last two episodes, I mentioned that we have that 200 EMA, we have that 200 MA, these orange lines, in position to give us a nice little bounce. So this bounce is to be expected. This support is to be expected, even though we broke down from that critical level that we needed to hold, that 3,800. And so I do expect us to continue to explore lower, but at the same time, I'm really open-minded to a bounce here because of these 200 EMAs. It's just a very tradable EMA. And we are also above our daily, we're up above our daily momentum area. Let's go back to the daily. We're not like critically above it. Like we don't have everything in a line, but we're doing okay. We're doing okay. If we can hold here and we don't retract by the end of the day, or if we push up a little bit more, then we should be doing okay. We don't have our 2-day Stokes. We don't have our 2-day or 5-day. Nothing. There's nothing macro bullish. There's nothing medium term bullish. It's just literally the day. That's it. Like just the day is pumping. That's all. Okay. Nasdaq, same thing. Okay, same thing, except Nasdaq is actually meeting a critical levels for all of its daily measures. So Nasdaq is performing a little bit better than the S&P right now, just in my estimation. Okay, but just by a hair. Just by a hair. Same thing though. So for the S&P, we don't want to lose 3660. We want to get above 3740, and ideally we would get above 3800. Okay, like reclaim that 3800 level. Then I'm really gonna have to question what's going on in the market, because that 3800 level was my master key to the market. Underneath 3800, we're going down. Above 3800, man, we could have seen the bottom of the market. So S&P 500 reclaims 3800. I'm gonna have to reassess everything, guys. Nasdaq, we don't want to lose 11,330. We want to hold 11,500 and 40, let's just say 35. And ideally, we could grab 11,739. These are the ES1 and the NQ1, okay? These are the mini futures for S&P 500 and Nasdaq, okay? You can figure out the equivalent for your own index. I think we covered Bitcoin, we covered Ethereum, we covered the DXY, we looked at the VIX, we looked at USDT, we looked at the S&P, we looked at Nasdaq. Let's look at the British pound really quick. Making a little bit of a recovery there. This isn't the best. This isn't the best. Just kind of recovering some. It's kind of a technical bounce. It's corrective bounce. 4-hour. Looks pretty strong there, but it's kind of fizzling out. If the British pound can pull itself back up, that's going to help out the dollar to have its pullback. It's going to be good for the market. If the British pound continues to dump, which I suspect that it still will, then it's not going to be good for the world. Like the British pound could have just screwed the world. Like if the British pound doesn't recover, it could have just screwed the world by strengthening the dollar. Okay, so it's having a corrective bounce, but can it overcome its momentum to the downside? Not sure. Not sure. Looks pretty ugly to me, guys. So let's find out. All right, guys, that was your alpha for the day. Stay safe. Bullish on today. Still a question about the 2-day to 5-day, and macro still bearish. We have another day to live. I'll update you tomorrow. Stay safe and happy trading.